Hello and welcome along to the industry analysis for the management case study of February 2019. Here we're going to be looking at the real-world dental services industry. It's always a good idea to familiarise yourself with the real-world industry before heading into the case study exam. It helps you to better anticipate some of the issues and scenario types that will come up on exam day, and so nothing will catch you off guard in terms of terminology or references to real-world industry structures and features. So before we get into the details, let me just give you a quick overview of what we'll be covering in this industry analysis. The first section will comprise a quantitative analysis. We'll be looking at some of the key market trends and figures from recent years and projections for the coming years as well in terms of general growth figures for this particular industry. From there, then we'll move into a more qualitative perspective. We'll be looking at issues like consolidation, the role of private equity, and vertical integration. These are all really important issues within the dental services industry, broadly speaking. From there, then we'll look at the consumer perspective, looking at patient patterns and factors that are influencing demand in this particular industry. Then we're going to look at a real-world case study. We're going to focus on one company in particular based in the UK, My Dentist, which follows the chain model which is reflected in the pre-scene that we're dealing with here. We'll draw out some lessons from My Dentist in the real world, and it'll hopefully help us to anticipate some of the issues that might arise in the case study exam in February. And then finally, in the fifth section, we'll look at some key challenges that are faced by companies within the dental services industry, broadly speaking. Primarily government, personal care, labour pool issues, and teeth whitening devices. So let's get started with the quantitative analysis. So we're starting here with the overall global dental market. This is a projection from 2016 to 2021 based on the analysis of Statista.com. Some really good facts and figures there in that website if you're looking for other information on the dental industry and indeed other industries as well. So you can see here from 2016 to 2021, relatively modest growth projected, nothing spectacular. We're looking at approximately a 5.6% compound annual growth rate through those 5 years. So nothing really spectacular there. That's a fairly modest growth rate when you compare it with other industries. We're looking here, of course, at the global market, so there will be variations within particular geographical regions. And here we home in on one such region. This is the UK, and we're looking here at annual expenditure on dental services in the UK over the last 12 years or so. And you can see there is a more or less steady upward trend in terms of expenditure. From 2016 to 2017, it was a fairly modest growth there. There is considerable variation year on year in terms of expenditure, but it is more or less moving in a positive direction overall if you're looking at it from 2005 to 2017. As you can see here on the right, a little breakdown, and they say in 2017 UK households paid for dental services worth around 3.6 billion British pounds, a decline on the two previous years. But as I said, in general, the trend from the last 12 to 15 years has been in the right direction. Now, this is where things get really interesting. This is looking at the segments within the dental industry, broadly speaking. And this is going to be very important for the rest of this industry analysis. We have DPMGs and DSOs. Now, what do these abbreviations or acronyms stand for? Well, DPMGs here you can see are dental group management practices, I should say. These are basically chains that are managed by professional dentists, and DSOs is an interchangeable term that's used as well for these kinds of organizations called dental services organizations, and that's basically the chain model that we're looking at in the pre-scene in the case of Crown Care. They're managed by dental professionals, and there are a number of chains operating under the same brand. Independent dental practices are still the majority within the industry if you're looking at absolute numbers, but if we're looking at growth, this is really the growth segment when you compare it to the industry average growth of 5.5% here. You can see we're looking at an 18% growth rate for those DSOs and DPMGs. So that really shows you that this is a booming segment within the industry. The chain model is really taking hold. In the United States, it is already making very serious ground on the independent dental practices. but it's a little bit behind in Europe, it has to be said. But certainly it is also the case that in European countries, this is beginning to be the growth segment within the industry. You can see here of the total market, it still comprises only approximately 7 to 8%, with the rest being taken up by traditional independent private dental practices. That's typically your local dentist in a small town or a small area. But when it comes to urban areas, certainly the model of the DPMGs and DSOs is beginning to become very important, and it's the major mover in terms of growth. So that's something to bear in mind. Here we're looking at market share of dental chains. Again, this is the DSOs and DPMGs that were mentioned in the previous slide, and this is focusing specifically on the European context. Now you can see there are several countries where it's still, again, very much down in the minority in terms of market share. Looking at 1% in places like France and Germany, 2% in Belgium, 3% in Italy. But it begins to climb up then as you move to the more northern regions, in particular Denmark, Netherlands and the UK, and Finland as well is especially saturated with these chains, the chain model of dental practice, 35%. So the kind of Scandinavian and Northern European countries, and then Spain is perhaps the anomalous one in there at 25%. But certainly it is not something that is unusual in the European context, and it is becoming increasingly common, this chain approach to the dental services industry. Here we're looking at DSO affiliation, that is to say the number of dentists who are actually affiliated professionally in some way, in some capacity with dental service organizations, and it currently stands at approximately 7.4%. This is according to the ADA, the American Dental Association Health Policy Institute. They unveiled this new data in March 6th of last year, showing that 7.4% of all practicing US dentists are affiliated with DSOs. But for new dentists, and this is the important point to bear in mind, aged 21 to 34, that number more than doubles to 16.3%. So that gives you an indication that young dentists and those who are just coming out and graduating are increasingly looking towards these groups for employment, much more so than previous generations. And that's again a signal of this as a growth segment, and this might be the future norm in terms of absolute share of the dental services market. This is KPMG's take on the European situation as it stands, and this is based on a report that they did, which is very useful, and it's actually linked in the sources section of this industry analysis. So I really do recommend that you take a look at that KPMG report because of some very interesting insights. They say there is a dual challenge in Europe of rising demand and budgetary restrictions in terms of especially government expenditure in this area. So consolidation in the dental care industry remains relatively low if you're looking at it in a broad average European sense. Yet the size of the Western European dental sector, estimated at more than $70 billion US, and high levels of fragmentation suggest an industry that is ripe for consolidation. So there's high fragmentation, but it is a large market, and if that consolidation can take place, as we'll see later on, there are a lot of gains potentially that can be made by those more shrewd and fast-moving, nascent developing chains in this context. So let's shift now to that qualitative analysis that I mentioned at the beginning of the industry analysis. There are several factors driving the rise of DSOs and chains. So we're going to look here at the reasons for the dominance of the dental service organization or chain model in the European context and here in the US context in particular. So you can see here there are a number of factors that are mentioned. The industry is graduating fewer students. A growing number of those new dentists are women, at 34%, of whom don't practice full-time during the first 20 years of their careers. So for whatever reason, women, it seems, are less inclined towards full-time employment. And the dental service organization model, I should say, and the chain model apparently suits those graduates better. It's a bit more flexible. They can work in part-time capacity. Whereas if these dentists coming out of these universities look to set up their own independent private practices, it's much more likely that they're going to be working flat out full-time constantly from the moment that they begin. Also, back office complexity related to billing, insurance, and regulation is ever increasing. That's especially the case in the United States context, with health insurance and regulation and all sorts of complex insurance relationships mediated by the government, making the dental industry increasingly complex from a bureaucratic point of view. There's also the rising cost of education, and that is especially the case in the United States, where it looks like there is a bubble forming in the educational sector, particularly at third level. But in other countries as well, in Western Europe, we're seeing similar patterns of rising education fees, and especially at the third level. And that might also reflect similar trends then in Europe. The rising cost of education means newly minted dentists are graduating with $200,000 to $250,000 of education debt at a time when the credit crisis has made financing more difficult for a solo practice. So for those individual practices, those traditional kind of small town independent practices, they're becoming increasingly infeasible from a financial point of view as dentists are graduating with that huge debt burden, which makes them much less favourable candidates for taking on large credit and large debts and loans in order to finance the opening and establishment of their own independent practices. So all of those factors together are funneling people and funneling newly qualified dentists increasingly towards that chain model. And it's making the chain or DSO model all the more feasible in terms of things like capital requirements and investment to get off the ground. Factors driving the rise of these chains and DSOs or dental service organisations in the EU context are similar in many respects, but here, based again on this KPMG analysis, we're looking at the specifics. They say that our discussions with market experts reveal a host of benefits offered by larger chains relative to those solo or independent private practices. Back office functions like finance, IT, procurement, marketing, and general management can be centralized in a shared service center. Very important point to note there for that. For the case study exam in February, you might see something come up in the exam about shared service centres and moving towards a shared service centre model in order to streamline those processes, those back office processes that become so costly from an independent point of view, reducing overhead costs and enabling procurement discounts on disposables, instruments and equipment, which make up a high proportion of operating expenses. Shared service centres are common in most current chains. Bear that in mind as well with respect to Crown Care, freeing up existing dentists to focus on providing care to patients. Again, remember in that pre-scene, many of the directors have dual obligations towards the clinical work that they have to do, and also their directorial obligations. And in the case of Crown Care, there's an obligation to spend 80% of time on clinical work. That is for those directors who are also heads of practice, and there's only 2 directors who do not have those dual obligations. And so moving towards that kind of shared service centre model might be something that would come up. So once a dental chain has achieved appropriate scale, it also has the financial clout then to negotiate better rates on things like property leaseholds. Now, private equity is increasingly important within this segment in the dental industry, moving into the chain area. And again, it has that advantage of overcoming those large capital investments, especially at the outset when you're trying to establish your own practice. So the potential in the European dental market has not gone unnoticed by many of these private equity firms, with a steady flow of deals in several countries, much of it initiated by private equity players. The Carlyle Group and Palamon Capital Partners jointly own the UK's largest dental chain, My Dentist, which we're going to be looking at a little bit later on, which was formed in 2011 and now operates over 650 practices, a really huge operation there. In 2013, Bridgepoint bought the number 2 chain, which is Oasis Healthcare, and sold it again in 2016 to private healthcare insurer Bupa, which has owned a stake in Spanish healthcare and dental chain Sanitas since 2003. Initially entered the UK dental market in 2014 when it bought Barbican Dental Care. So you can see there's a huge amount of movement and buying and selling and acquisitions going on here in the context of private equity firms. And that indicates that this is an area with a lot of potential for growth, a lot of shifting around. looking to find the sweet spot, so to speak, but certainly it is a growth segment within this market, and the possibility of a private equity firm coming along and investing in or even acquiring a company like Crown Care is something that has to be considered as a possibility.